Tata Motors falling nearly 6%. Bajaj Auto is actually gaining. Puneet, give us an understanding of what exactly is happening.
Well, thanks for that. So, essentially, just the key question that is smart money moving away from Tata Motors now, given this particular bearish note that is coming now. Because JLR was one of the most standing outcomes of the industry because, the commercial vehicle as passenger vehicle segment in India hasn't been performing well and recovery is only in H2. So, that's the key output. Essentially, Bajaj Auto has hit all-time high also in the trading session today, while Tata Motors, just a couple of qualitative points, this is its longest losing streak in about 16 years. And also that the stock has fallen for a 9th straight day in the session today. Stock has fallen about 8% in this particular month, which is, while the benchmark is up roughly 2.7%, the Nifty essentially. Now, there are two key reasons we want to highlight here. The first one is, of course, the UBS note. It's maintained a sell rating with a target price of 825 rupees per share, a 20% downside from the current levels as well. And essentially, they are saying that, Range Rover Sports, the premium model of the company in the JLR division, has essentially seen the discount rise very substantially in the month of July and August. Now, apart from that, they have mentioned that there are 2-3 successful models such as the Defender as well as Sport. They had a very extensive run in the last 3 to 4 years, but that seemed to have been slowing down. And the only way they will be able to play the growth story in JLR will be through discounts because they don't have any other launches in this particular for JLR. JLR will essentially transition to a EV only company next year, but launches will come only in FY26. Apart from that, they're seeing that rising discounts as well as moderating growth for the segment is a key negative, and they have mentioned that CV demand, as we mentioned at the start, as well as the passenger vehicle India business has been wobbly. So that's one of the key negative reasons for Tata Motors falling. Apart from that, we just feel like that the fund managers might be changing the allocation within the auto segment to two-wheelers, and the reason is that in Q1 of FY25 we saw 17% growth in sales for two-wheelers as an industry as a whole, while the passenger vehicle industry grew by roughly just 6%, and that's also because Mahindra grew by 20%. So both Maruti and Tata Motors haven't been performing well in terms of sales. That is one key thing. As well, Bajaj Auto, the valuations are very attractive, roughly at 25 times price to earnings of FY26, and someone like a TVS is at 35 times. So it definitely fits right in the middle of Hero as well as someone like a TVS. They're not expensive, but playing across the electric vehicle as well as the CNG theme. So that's another key aspect to look at, especially for Tata Motors.
Right, 138%, that's the return that Bajaj Auto has given over the last 12 months. It's been such a solid ride for Bajaj Auto. But Puneet, while I have you, give us your take on this FAME 3 PME drive. What's your take?
Well, definitely, just a couple of points I wanted to highlight. So, allocation is expected to be around 11,000 crores, which is higher than the 10,000 for FAME 2. But what I would be looking at is the allocation within these schemes. Now, in FAME 2, there was 40% for e-buses. Will that same proportion continue is one of the key things to watch out for. And also another thing that we now have the e-LCV, the electric light commercial vehicles in the market now, which has been launched by Tata Motors as well as Ashok Leyland. Now, that's something which was not taken into consideration in the previous FAME 2 scheme. So if the allocation has increased, does that mean that this has been taken into consideration as well? That's something, one of the most important things, because e-LCV market is very huge. We've already seen Tata Motors sell 5,000 e-LCVs in the market, and it's going to be the new normal for the next 5 years. So if this allocation of 11,000 crores is for the next 3 to 5 years, this has to be taken into consideration. So one important thing will be the allocation within this 11,000 crores for e-buses, for electric LCVs, as well as, the medium to heavy commercial vehicles as well, because there is only some talks on it being LNG right now, and electric is far away for the medium to heavy commercial vehicles. So that's one of the other things to look at. And of course, the main thing will be the four-wheelers, electric four-wheelers, because we've seen the demand also in the first 6 months being very wobbly for the passenger vehicle industry as a whole. So there are a lot of premium launches like the Curve coming at 17 lakhs, but that's essentially something that we should watch out for. Back to you.
All right, thanks for that, Puneet. Ruchit, let me come to you on a couple of these at least buzzing stocks on the Nifty Auto, Tata Motors and Bajaj Auto. Your take with regard to what you expect going forward and what levels to look out for now?
So I'll start with Bajaj Auto. There's no doubt about the trend for the stock, irrespective of what the other stocks from the sector are doing. A clear buying interest has been seen in the stock. The high top, high bottom structure is getting continued, and the recent higher bottom at 10,800 now becomes a very crucial support for at least even for the short term. So I think until we see any kind of change in the structure, the relative outperformance is expected to continue. Even if you look at the volumes in today's trading session, it's quite high compared to its daily average. So the volumes are good. Stock is rallying in spite of the other stocks within the same sector not doing well. This is clear signs of relative strength, and hence that uptrend could continue. Now coming on to Tata Motors, today's gap down, the stock has breached that 89 EMA support, which is usually seen very important from short to medium term. So I think this could lead to some underperformance in the short term. However, on the medium term charts, around 940, 950 is one level where again the 40 EMA on the weekly charts is coming. So that will be the crucial test whether it breaks that level as well and see some further price wise correction, or it slips into a consolidation or a time wise correction for that. So for now, we are not advising to do any kind of bottom fishing in this today's 6% fall, but rather around 940, 950, that will be the range where next support is placed. So we will review around those levels.
Okay. Deven Choksi also with us. Very good afternoon, Deven. Great to speak with you as always, and especially today when, I think the market is trying to figure out what direction, and the mood has turned a fair bit. You've seen markets come off highs, the biggest pain point in auto. So let me start with your take on whether Tata Motors really deserves the kind of bashing it's getting. It's a UBS report, yes. It's a 1 year, 12-month target price, really. Is it really that much of an issue right now, fundamentally, that you see in Tata Motors?
So, good afternoon, Tamanna. I think as I see it, I think a little bit deeper inside the subject. What I find, I think on one side, we are seeing the commodity prices dropping because of the crude oil prices, and the resultant commodity prices are dropping, which is basically likely to see the productive environment going forward for most of the industries, including those who are using commodity as a base material. Now look at the case of automobile and look at the case of Tata Motors. On one side, you have got the inventory already in the books. On the other side, I think you're having a situation of commodity price dropping, which means I think the raw material price is coming down to that extent. I think they will have a relatively better times going forward as far as the vehicle is concerned. Had they not resorted to this discount and had they not resorted to clearing their inventory first, probably I think it would have created a serious problem to them in subsequent period of time. So even if it means that I think for a quarter, I think if the company has to take a hit, they have taken a hit in the passenger vehicle segment, probably clearing of the inventory. Meanwhile, the underlying demand is not going away. Maybe I think the validation of this particular thought will happen once I think the full discounted related impact I think is playing out in the market and when the buying takes place. In my viewpoint, ahead of this festive season, I think the bringing down the prices of the vehicles would not only mean clearing the inventory, but also repairing or preventing the balance sheet for getting into kind of a damage and the damage control mode that they have implemented. So I am relatively more confident, particularly also because of the fact that I think the commercial vehicle business is a robust business. I think it is producing good revenue and the profit both. To an extent, passenger vehicle business will get affected, but I think the commercial business will probably support the company at this point of time. So not that everything is lost. Maybe I think one can probably see the reaction to the report, which has come up from the analysts. But I believe that I think the stock price should stabilize eventually. And I think buying at the low level cannot be ruled out, I think, in this kind of a situation.